Eric Mwather with another Rethink video. This time we are going to be taking a look at some odd observation that I've always observed in the market for a couple of years, and I want to show you that there's a lot that needs to be done in terms of technical analysis. Let's not assume that we have discovered all there is to discover about how to use the technical analysis, because I think there's so much that needs to be discovered, and somebody out there is going to be always coming up with new ways of looking at the market. Let me show you some odd observation. It's really intriguing, at least in my opinion. What I'm going to do is I'm going to draw a straight line, and the line is going to be right there. In fact, let me increase the thickness here. Alright, so you see this line. Now this line connects the lows, as you can see, and this is a monthly chart for a stock, SIGM. I could have picked any stock, but this is going from 1990 all the way to the current market here, August 2014, and so it's connecting all the lows on the monthly RSI, all these lows. How this happens, I don't know, but at some point in 2008 the stock broke below that level there and came down, and the same line becomes resistance now. In fact, it came close to that line here, which was a high. It hit the same line precisely on that line that was previously support over a period of about 13 years or so, and now it's becoming resistance, which is this level here. Very interesting. But what I found really curious is if I take the same line and just copy that, so it's the same line, and I put it, adjust it slightly, what's interesting is it gives me, this is uniform activity above the line and back below it, so that means that it's a reversal, which is that major high. Uniform activity above the line and back below it, so that's a high. You can see the same thing here. So if you go backwards, it gives you all the highs, double top there on the same line, uniform activity above the line, back below it, that's a major high. So interesting is that this is parallel. These two lines here are parallel to each other, and they make sense. In fact, it's interesting that if I take the same line, now another parallel line, you see it makes a high. The same line gives a high here on the monthly RSI, and that high. Both of those highs were significant because the stock would drop from here all the way to here, and also from here all the way to the current lows lately. So interesting that the same line is doing the same thing. Now, to make things even more interesting, I'm going to take the same line, copy it, and bring it now to the current chart, which is here. The same line, and it gives you this low and this low and this low here. How that happens, I don't know. It's really interesting to me. Now I'm going to take the same line, copy it again, just so that we can see how, or just move this line here and take note of this. So it was support here, and now it's become resistance recently here at that high, there at that high. So interesting here, you can see with the end of the month coming up in August of 2014, if next month it rolls over like that, that becomes a high. On the other hand, if it breaks out, then that becomes a change, because what has been resistance, which is this line here, could now become a buy signal. Hope that is not too confusing. All I'm trying to say is that it's interesting to me that these lines that seemingly make no sense make a lot of sense when you look at them from the point of drawing parallel lines. So how that works really is very interesting. So let me take two lines off. I want to show you something here. It seems to me like, and I've noticed this, and it's something I'm still doing research on, it seems like stocks have a channel, not only as far as the price is concerned, but sometimes even as far as the RSI is concerned, and this is going back many years, this period here is lasting a lot of years, from 93, 92, all the way to 2008. It's only after it broke below the channel here that it hasn't done well. And so it seems like this was the channel that the stock had to stay in, this channel here, in the period when it was doing at least okay. Once it broke down here, the same line became resistance. So it became resistance here, the same channel became resistance. So what I'm saying is, in the future, at some point, if it ever came back to the extension of the same line and found resistance, let's say something like that, then that means it's a major high, short term. So interesting how that works. Now you might think this is just one off thing. I want to show you 3 other charts that seem to indicate that there's something about the way the stocks behave that is consistent over a period of many years. You might be familiar with this chart. It is for the NASDAQ monthly, going back from, so it's the NASDAQ monthly chart going back from 1980 all the way to the current chart of August 2014. I want to draw one simple line, and there you have it. This simple line seems to show us, if you go back, it gave us the low, for example, the lows of the crash of 1987. It gave us the low in 1990-91, which is here during the Gulf War, and it also had a double bottom support during the dot-com crash of 2002, 2001, 2000, and again it gave us the low in the market in 2009. How can the same line do that over such a long period of time? Now let me show you another one. But before I do, remember, we call this bottom here March 09. You can check out my video on YouTube that I made on March 6th, 2009, just the weekend before the market made a low of March 9th. So this is one of the reasons why I thought the market was going to move higher, based on the fact that I was seeing that the RSI had come back to the previous support level that has been established over a period of so many years. Now what we have in front of us is the Dow Jones monthly, going back again from 1980 to the current chart, which is August 2014. I'm going to draw another line, and so there you have the line. Now I have to note that this here doesn't look right, because the Dow has been trading longer than 1980. So I assume the software here is calculating the RSI going off the 1980 price level. So I'm taking that off and drawing the line that makes sense, and you can see that it connects also to the drop in 1987, lows of 1990, 91. It hits the lows during these lows here in 2000, and you can see that once we went below and then back above that line with uniform activity, the buy point is somewhere here in March or April of 2009. So that makes a lot of sense that that line continues or was very productive in 2009. So let's go to the S&P 500. So this is the S&P 500 monthly chart from 1980 all the way to 2014 August. And so let's draw the line. And so here we have the line, and it too seems to give the lows of 87, late 1991. After we recaptured that level there, happens to be the perfect entry level in 2003. And also once we recaptured this level here, after uniform activity below the line and back above it, that was this period here about March, April of 2009. So that makes a lot of sense that the line seems to be consistent with predicting major lows in the market going back to 1980. So I want to draw one more line, and the line that I've drawn is a red line. Before I do that, let me remove the blue line so as not to confuse us. And you can see that the red line connects the lows of 82, 83, 87, 90, 91, 92 time period, lows of 95, the lows of 98, and it is only after we broke down here in 2000 that we had the dot-com bubble bust here. The same line, when you extend it, it is only after we broke down below the line here, which happens to be late 2007, before this move lower, which was the crash of 2008. So guess what? So we are now bumping heads with the same line here. The indication here could be that we are looking at a market that could be looking at a major high, based on the fact that this line has been very consistent, and the fact that now this seems to be like resistance along the same red line. Now let me point out something that is important here, is that the market seems like it doesn't drop. It does not drop until such a period as to when there is a major break along a major established RSI lows line. So there was a major break of this lows line here. That was a major break of an established line, and that's why we had this movement from here to here. There was another break of a multi-year trend line on the monthly RSI here, which coincided with a break here in late 2007 to the lows of 2009. And so we can assume that the next major bear market is not going to begin until we break this trend line connecting the lows in 09, the lows here 2011. And so if we break below this, then that's when the market should have a serious bear market. Eric Moade, good luck, peace, and blessings. I am out.